my friends. Josh here with Traded Profile. I want to do a quick video this evening. No, we haven't done a weekly update last week. There's just some stuff that we're working on in the background. It seems like we're we're just in this journey. We're finding out new things about who we are and where we are in the space, and quickly hurrying behind the scenes to kind of get some stuff ready. So we're going to be making some announcements on some stuff at the end of this week that will impact where we are going for the rest of the year. But for the time being, I just wanted to talk about today's auction, particularly in the equity index futures or in the indexes themselves. So this would be the S&P, the Dow, the NASDAQ, the Russell. We look at it primarily through futures indexes. It's just a great trading vehicle. And one of the things that we talk about with traders that are developing with us is this concept of expected behavior versus unexpected behavior. And what we mean by that is, when you look at how an auction behaves, there are certain things, like if you show up at an auction, there are certain things that you'd expect an auction to happen. If, for example, if you believe that there's an understanding of where value is, you would expect that people will buy aggressively below value, because that's an advantageous position. And if you're above value, you would expect buying to taper off. You would expect people to be more tilted towards looking to sell if they were above value than below. That's an expected behavior. But today we had an unexpected occurrence happen, and now we're actually seeing expected behavior in Globex. And so I just kind of want to point these two out. This is a distinction of someone who's new to markets and someone who has been around for a while. So Wednesdays inside of our community, we call it What's Your Plan Wednesday, where we all try to come together, and those who are working with us are submitting their own plans for the market. We believe very, very strongly that if you're going to make an investment, you're going to look after an opportunity in the market, just like in any business endeavor, you would not do that without a plan. Who goes into a business opportunity without a business plan? Trading, we view it as a business, and so you need a business plan. And so we work on having a narrative every morning. Well, today, the plan and expectation based on how we traded in Globex activity or the overseas action, which is represented here in this profile, was we saw a very, very large gap to the downside coming into this morning. And we had spent several days in an area of prior acceptance or value, and seemed to be rejecting that early this morning. Now, I will tell you that if you go back and look at about 1,000 trading sessions and you measure gaps from where we opened this morning and gaps of similar nature, the statistics on those closing are very rare. It's like less than 10% of all instances of similar gaps for the last 5 years would you see that. So it was unexpected that we would close the gap today, and yet we did. So that's recognizing that that's an unexpected behavior is one thing. So we closed all the way back up. So the gap was from here to here where the open was. We did close that, and then we also had we came back to test this prior area of value. Now, an expected behavior when you come into an area like this is a rejection of that we would come in, that the auction would slow because it's a prior area of acceptance, and it could be moved through this with a catalyst, or it could reject and rotate back lower. Now, we did have a catalyst today, and then we had an FOMC minutes, which typically is not that big of an economic event, a release, but today it was enough to juice the auction through. And you can see this impulsive, we call this like a midday gap. You can see that they gapped from and only printed these prices in one 30-minute period right across this area of acceptance to press higher and actually engulf completely the prior day. See that? Okay, that was unexpected behavior for today. That was unexpected for the plan based on probabilistic statistics, based on where even value was on the day. Value on the day is still down here at the 68.72 area. So they moved the price way higher and did not pull value with it. So that was unexpected. It was unexpected behavior. Now, tonight in Globex, we're actually seeing some expected behavior, is that because they were so impulsive, to the upside. We're now seeing that in Globex, they're coming back to backfill some of this auction, and may likely test back to this level here into tomorrow. That's an expected behavior. So I just thought this was a fantastic example to illustrate the dynamics between expected behavior or unexpected. Here's the great takeaway around this. When you're building your approach, when you're building and trying to search for edge in markets, you want to build your approach around expected events and have a risk plan for when something unexpected happens. So I know within our community, we had a number of traders that were looking at that 69 to 12 level to sell on the first touch, and that was a great place to look for a sell. But almost universally, everybody knew, hey, but if we get above this level, we could be wrong and we need to get out and cover. And I saw really good risk management around that today. Really proud of our team as people were having a plan for the unexpected. So you build an approach based on the expected behavior. So the expected behavior that we were looking for was, hey, we were going to come up here, find a test, then come down back to value. That was the expected behavior for a number of reasons I can't go into right here. What was unexpected is that we goosed above that. So they had a risk plan for the unexpected. They built a plan on what's the expected behavior. I tell you what, after close to a decade in markets, consistency in your profits, consistency in your business. You're never going to likely be 100% right all the time, but you're going to see a much higher percentage of being right when you're building your plan and perspective on what's expected versus unexpected. So spend some time discerning auction behavior. Is it expected? Is it unexpected? It'll save you in the long run. It potentially could save you thousands and thousands of dollars in risk. Hope that helps. Let me know about any questions that might arise, or if you're looking for additional examples, or if you found, hey, I got caught off one time, and you're like, me too. I got caught off by some unexpected behavior. We've all been there. That's kind of the reason that we learned this, is we've been bit, and we're now using it to our advantage. So have a great night. Be looking for the updates later this week. Some exciting stuff coming for the rest of the year that is going to be, I think really quite a game changer in the industry, and specifically in our approach is to help traders build skill as they express risk in the market. All right, have a great night. Peace.